afternoon. Welcome to Business Incorporated. This is where you do 55 minutes of business. It's the first working day for you, but it's the third day for us, and we're still doing business right here. Here's what we have prepared for you on this episode of the program. We head South Africa. Inflation is unchanged, even as the president begins a second term. And then we come to Nigeria. The issue of aviation safety is in the air. We'll dig into that. The protest against finance bill is still on in Kenya, even though they've scrapped the bread levy. Good afternoon. Welcome to Business Incorporated. I'm Ini John McCoy. We'll start business right here from the global space. Oil prices slightly up in early trade on Wednesday as concerns over escalating conflicts in Europe and the Middle East offsets demand worries following an unexpected build in the U.S. crude inventories. Brent crude futures for August delivery rose 6 cents, that's to $85.39 a barrel, while WTI of the United States also inched up. It gained 10 cents to $81.67 per barrel. Both benchmarks were up more than $1 in the previous session after a Ukrainian drone strike led to an oil terminal fire at major Russian port. And this is according to Russian officials and Ukrainian intelligence source. In the Middle East, meanwhile, Israeli Foreign Minister had warned of a nearing all-out war with Lebanon's Hezbollah, even as the U.S. attempts to avoid a broader conflict between Israel and Iran-backed Hezbollah. An escalating war in the region raises the prospect crude supply from key producers could be disrupted. Gasoline entries, however, fell by 1.077 million barrels, while distillates rose by 538,000 barrels. The source, according to sources from both markets. Official U.S. stocks data from the Energy Information Administration is also being quoted, and we're expecting some data later on Thursday, which should affect some of that. Still in the oil space, but in Nigeria, Nigerians expect PMS production from the Dangote refinery is supposed to start from next month, July. And some stakeholders in the industry believe that Nigerians have no business paying more than 300 naira for a litre of premium motor spirit. That's petrol. This is according to Mr. Madaki Ame, the managing partner, BBH Consulting. The inefficiencies, he says, in Nigeria's oil and gas industry must be addressed for survival. He made this comment on Business Morning earlier today.
I've not seen any conscious effort being made, to actually increase production. And the frustration I face with this is that there's so much knowledge, there's so much inbuilt capacity here, but there's so much mediocrity in the oil and gas industry in Nigeria, and as long as you keep doing the same things over and over and again, you are never ever going to see a change, Now, we look for all the excuses in the world to get things wrong in this country. And because we reinforce mediocrity, there is no consequence management for people who are in big positions but are doing absolutely nothing, to earn their daily salaries, And I don't know how they are able to sleep well at night. We keep talking ad infinitum about trying to rein in crude oil theft. Same country, some years ago, we were able to grow production from 800,000 barrels to over 2 million barrels within a space of about 6 to 8 months. And the person who made that happen, a certain Rear Admiral A.O. Suleiman, is still alive. He's retired from the Navy now, but he's around. Why are they not asking him what he did? A few people benefit from it, from the level of rot that we are undergoing at the moment. I find it extremely frustrating that every single time we get called up, on programs like this to provide solutions, and then you're talking as if you're talking to the wall.
expressing his frustration there about that issue around especially petrol supply and pricing in the country. Now, let's get out of the oil space and go to metals, where gold prices edge high on Wednesday after softer U.S. Retail sales that came out yesterday boosted expectations that the Federal Reserve will cut interest rates this year. Spot gold's up 0.1% at $2,331.17 per ounce. U.S. gold futures fell, however, 0.1%, $2,345.60. Data released later yesterday, Tuesday, shows that retail sales barely rose in May, suggesting that economic activity remained lackluster in the second quarter. Market focus is now on the weekly jobless claims, which is due on Thursday, and flash purchasing managers indexes, that is due on Friday. Gold prices have entered a consolidating phase after hitting a record high of $2,449.89, and that happened on May the 20th. Now, looking at other metals, spot silver was down 0.1%, $29.49 per ounce. Platinum was up 0.1% to $973.86. Palladium gained 0.2% to $888.91 per ounce. Back to Nigeria now, where the country currently ranks 88th position out of 141 countries in the World Bank Logistics Performance Index, that's LPI, indicating a minimal improvement in the global logistics ranking of 91st. That was the position in 2022. The LPI is an interactive benchmarking tool created to help countries identify the challenges and opportunities they face in trade logistics and what they can do to improve their performance. The top 12 performers on the 2023 LPI are high-income nations like Singapore with a score of 4.3. That's in the first position, a position that it has held since 2007. And 2012. On the logistics performance score, Nigeria recorded 1.9 points out of overall points of 5, while on the customs score, it recorded 2.6 points. On infrastructure, Nigeria recorded 2.4 scores as against 2.4 recorded for international shipping score for logistics competence. It recorded 2.5 as against 2.3 in tracking and tracing score. For timeline score, Nigeria recorded 2.7. Now, the Manufacturers Association of Nigeria is concerned over the rate of insecurity after the kidnap of the managing director of Fauni Group, who has now been rescued, thankfully. According to the Director General of the association, Mr. Segun Ajayi-Kadri, the incident has left the entire manufacturing community shocked and concerned about the safety of its chief executives and indeed its workforce. Mr. Ajayi-Kadri commends the security agencies for the safe release of Mr. Fauni and asked for intensified efforts to tackle rising cases of kidnapping and insecurity in the country, as it poses a significant threat to the business community and overall economic development of Nigeria. He believes that if not checked, insecurity will erode investment confidence in the economy and further jeopardize the efforts of the present administration, led by President Bola Ahmed Tinubu, at repositioning the economy for growth. And now we will take a short break. When we come back, the issue on the front burner is aviation safety in the country. We know that apart from that World Bank Index rating that we had, that there's also been the rating by International Civil Aviation Organization. And yes, the mark may not be so bad, but it's a drop. Nigeria has dropped about 25% in that rating. So we'll discuss that, the implications, and a whole lot more just after this break. To stay with us, it's Business Incorporated on Channels Television. You're welcome. welcome back. You're still watching Business Incorporated right here on Channels Television. And yes, we are going to the aviation sector now. It's the story, I think, since yesterday, because from an all-time high score of 96.03% when the International Civil Aviation Organization conducted the Universal Security Audit Program in June 2015 to 71.04% in the recently concluded, so losing about 25%. And we've seen a whole lot of talks going on about what the achievement of this administration in the aviation sector has done so far or not, even though, of course, we do have that obviously applaudable Air Peace route to London. But let's look at the bigger picture now with someone who's really experienced in that area, Mr. Chris Aligbe. He's been in that aviation sector in Nigeria for many, many years. But now he just prefers to be the Chief Executive Officer of Belgian Consult. Thank you so much, Mr. Aligbe, for your time. Good afternoon.
Thank you. Good afternoon.
Yeah, so how much of a big deal is this 25% drop in this rating, the ICAO?
Well, you see, no country wants to drop when such audits are conducted, because it will first give an impression that the standard is dropping. But I don't think that it doesn't make our security or airspace unsafe. It is there. But all that we need is that we have noticed a gap. What we need to do is to quickly close the gap. But it's a drop, yes. But we should not be dropping that way.
Mm-hmm. We should not be dropping that much, 25%, because NAMA has come to tell us, that our airspace are captured by the total radar. I think that was the concern that led to this drop.
Well, the fact of the matter is that it's a safety audit. Arguments to and fro is not necessary. What is necessary for us to take the result and work to improve the situation. We should not, if we are at 96 before, let us stay at 96, even if we don't move, because 96 is very high. Even if we are up to 90, whatever, but there's a gap, we've noticed it, we should close it. That's rather than going up and down with these arguments, whether it is high, is a drop, or is a drop.
So where are these gaps, and what do you think can be done to at least head back to 90?
I wouldn't know the exact details of what should be done, but normally when such audits are conducted, they tell you the areas of deficiency, the areas that cause the gap, and what happens is that all the agencies involved, NCA, NAMA, or whatever, we take these areas and close them. It happens everywhere, but the thing to do when you don't accept the situation, the first thing is that let us not live in self-denial. Let us straight away address the issue and then get back to where we should be.
So that's for safety. I know the issue of consumer satisfaction also comes into play. These days, you want to travel, I think you do special prayers. Not about the safety, but also about meeting up with your target, your appointment. And what's really happened? We hear airlines are firing staff. What's really going on?
You see, again, our airlines, like every other sector, airlines are in trouble. The fact that the economy has impacted on the airline, the state of the economy. If there's no disposable funds for people, then they won't go flying. And the fares have risen tremendously in recent times because airlines have their costs to meet. But the airlines themselves, in terms of consumer protection, the airlines themselves have not done what they should do. They keep blaming, they will blame everybody, but not themselves. For a long time, for many years, we say to the airline, look, have an arrangement within yourselves. Interline that if you cancel your flight, you'll be able to take me and put another flight. But they don't want to do that.
Maybe competition?
What kind of competition? What kind of competition that you cannot take me and put in another? That's what happens globally. That's why I say our airlines, they have not learned. They complain about everybody. Yes, there are challenges outside them. extrinsic challenges, but there are intrinsic challenges coming from within them, which they are not about to address. Over time, you take their corporate governance, they quarrel with you. Why should they still have a business and they have nothing to do, they can't manage it? You tell them about interlining, they quarrel with you. You tell them, look at your schedule. If you are down from 5 aircraft to 3 aircraft, look at your schedule, cut it down, and then make sure that you operate properly. They think you're just criticizing them unnecessarily, but that's what is done elsewhere, everywhere. And
isn't it possible for the regulator to step in and maybe compel them to adopt some of this system just for the safety of the sector itself?
Apart from safety, the consumer rights in our country has been so thoroughly abused by airlines, our domestic airlines, abused by foreign airlines. So, but I think the NCAA, the regulator, has been making great efforts to do something about it. They've been, you can see some certain times they come and intervene and to make sure that these things won't continue. Recently, the minister has been talking about it, whatever. But yes, he's talked about it. Maybe he has given a fillip to the regulator to make sure that they get into it. But I don't I would say the airlines appear to be recalcitrant about it. And they don't, and whether they care or they don't care, one cannot say. But what is happening is that it's impacting terribly on them. That is why some people say, stop foreign airlines from going to many stations so that when they bring passengers, our airlines can take them. Our airlines are not in a position to offer that kind of service that will make foreign airlines, because they can't interline with themselves. A foreign airline who brings a passenger and you cancel the flight, that foreign airline, there's something we call carrier liability. He suffers that liability, or liability of you disappointing the passenger or whatever cost the passenger bears. Because today, when they cancel flight, the airline will say, you pay through this, you wait 2 weeks before ever you get. There is a new rule in the US. It's instant. If flight is delayed to the point it should not be or cancelled, you give the passenger the money immediately. If a US airline makes the mistake to interline with any Nigerian passenger and something happen, Nigerian airline, and that operation happens, he bears the brunt because that passenger can go back and sue the airline and demand from the airline. That's what we call
maybe FCCPC should step into this. I mean, they are the overall protector of consumer rights.
That's the overall consumer right. But I would love a situation where FCCPC becomes a referral institution. That when NCAA fails, the issue can be referred to FCCPC because NCAA has all that it takes. The laws in terms of regulations, NCAA is known by ICAO because all these laws come from ICAO. But FCCPC, yes, is an omnibus institution, and FCCPC have shown that it has teeth to bite. It has shown that it has teeth to bite. So, but it has a lot to do, and I'm happy that it's biting. But the fact of the matter is that if he goes to every sector, he will be overloaded, that he will begin to lose strength. But yes, it should stay as a referral institution so that whenever there's a failure, that person can refer to FCCPC, and we get, because FCCPC has a tribunal, and I think that's what should happen in this situation. But airlines haven't done what they should do.
But when we look deeper into the source or the cause of these disappointment, and we see even airlines that, when they came in, they were so reliable. Now we see them also falling short. Doesn't it tell us perhaps the problem is with the infrastructure or the structure in the sector generally, and not the thing with airlines?
Let me tell you, the infrastructure challenges are there. Like I say, there are external factors, extrinsic factors, there are intrinsic factors. Like I told you, when you operate in a manner that you cannot have a relationship, a corporate relationship with your partners within even the domestic level, There's no way you will meet, you'll be disappointing passengers and everything. That is worse again when you look at even international operations. I really pity those going to international operations. What they're operating today is what I will call stone age operation. There are 5 levels of operation in the airline industry. The airline in 2 areas that the world has succeeded with globalization. One is telecommunications, one is air transport, airline industry. And if you don't key into that globalized level, you are not where. You are flying point to point. When you are flying point to point, your market is constricted. You cannot make any money. You'll be experiencing losses. And that's what has happened. Even Monof Airline, Nigeria Airways, from 1986 when it was chased out of the IATA clearing house to the end, Bellevue, Arik, Medview, and presently...
And now F is going to London. And the minister has told us very soon we should be expecting Nigerian airlines going to the United States.
Yes, I normally don't want to talk about individuals.
No, he's the minister, and he said we should expect that.
No, he's the minister. I wish the minister were here, but when he's not here, I won't shave his head behind him. But all that I want to tell you, our airlines should do what we're operating. There are 5 or 6 levels of operation before you get to the top.
So where is Nigeria in those 5 or 6?
Nigeria is at the basal level, what I will call the stone age level. When the airline industry started, they started with point to point as far back as 1933. By 1947, IATA created the platform for interlining and co-share. Nigeria was able to enter the 70s, but by 1986, he faltered in IATA clearing house, and he was expelled from IATA clearing house because he defaulted in payment. So he started point to point until he died. Is point to point. Bellevue, point to point. Arik, Medview, Epis, point to point. When you're operating point to London, you only have 30% of the whole traffic going to London. That 30%, because it's only those stopping in London that you can carry. Those who are going beyond London, that market is not available to you. And of that 30% that is going to London, there are still some of them who are frequent flyers or either on Virgin or BA. So you can't get them. So you have a narrow market. You cannot operate successfully on that. Is there
a way to accelerate and move away from this point to point? At least we have airpeace now. If we can maximize that, that might also help us.
Let me tell you how to move away. That's first point to point. The second point is interlining arrangements. Interlining arrangements, it came in 1947. It started then, but that is second level. Second level, unless your operation is at the level of, that's what I'm telling you, that's what they call carrier liability. If you're not operating at the level with the person you're interlining, there'll be a liability. If you fall, if you fail in meeting the obligation, then the other airline might, because you can sue an airline anywhere from the way where he is taken off from. But that's the second level. The third level is associate of a global alliance member. That happens when an alliance member invests in your airline. Invest in your airline, like KLM invested in Kenya Airways, like the beleaguered Nigeria Ethiopian Airline. Ethiopian Airline is a member of Global Alliance. KLM is a member.
So if the partnership had worked, that would have raised
to the third level, associate of a Global Alliance member. The fourth level is when you become affiliate of the Global Alliance. But then the final level is when you now become an alliance member. There are 3 global alliances. One World, Sky Team. One World has about is led by British Airways and American Airlines. There's a Sky Team. There's the largest is Star Alliance, where you have Air France, KLM, Delta. Those people, yes.
Mr. Aligbe, we see our minister is really active, and I know he's also received some knocks, when they were, I think he outlined some achievements in the first year and all of that. But do you see us on the path, or at least moving to the next level, at this time? Do you see some movement?
Let me tell you, I'm a die-hard optimist. But even as a die-hard optimist, I'm a little bit circumspect. But I know that I say it is too early to use 1 year to judge any person. But like say, if you see the trajectory, if you see where that person is going to, you can say, okay, we will be there. But I think that whatever missteps or whatever gaps or whatever I have done will be corrected in this place. If that happens, we will move forward. I'm a die-hard optimist.
All right, let's stay with that. Yes. Let's stay with that. It's better for the heart. So, let's be optimistic.
Yes.
Well, thank you so much, Chief Executive Officer of Belly Jane Consult, Mr. Chris Aligbe, for sharing your years of experience with us. We appreciate that.
Thank you. Thank you very much.
Let's take a break. When we come back, we'll head to the market right here on Business Incorporated on Channels Television. Welcome back to watching Business Incorporated right here on Channels Television. We head to the markets now. Trading for the very first day this week. Anite Edet has the details. Anite, good afternoon.
Yes, good afternoon, Nini. Of course, it was quite a long holiday from the weekend into 2 trading days, 2 days in the week. And then the first trading day, Wednesday, starting off quite on the green side. Let's exactly. Of course, we always like to see that green color printed on the Nigerian exchange as well as some other markets. Now, let's take a look at the intraday numbers coming up from the Salah, the 2-day Salah break. Nigeria's investors are consolidating the comeback that we had sometime last week. Of course, we have some portfolio investors as well as local investors putting their money into this market, and there we have it there, back at the 100,000 points, which has now become what you might call the new psychological level. And at 0.09% in the green intraday, we see sectors such as the oil and gas as well as some banking counters making that move. And of course, tomorrow we'll be having Fidelity Bank combined offer, which will greet the market, and that's one of the first offers to reach this market so far, as far as bank recapitalization issue is to be mentioned. And still tracking Africa, we see the South Africa's stock market 1.33%. Very strong, and also it has crossed the 80,000 points. Not just the South African stock market, but as well as the rand, the country's currency, has also firmed, and this is coming because investors have endorsed the second term leadership of Cyril Ramaphosa, the country's president, who has just been inaugurated for a second term to lead Africa's biggest economy so far, which is Nigeria's sideways contemporary. So the 2 African giants in terms of economy and the market, they were in the green at intraday. Now let's look at the other side of the market, where we see Egyptian stock market still on holiday, well in the green there as at last week, while Kenya's stock exchange, that's the NSE 20, was in the red, 0.40% at intraday. So that's it for African market that we track at intraday. And now let's talk about the fixed income market a little bit, and this time we're looking at the Eurobond market, where initially earlier this year, the finance minister, Mr. Wale Edun, had announced that Nigeria will be seeking to raise some funds sometime in the middle of this year for several financing through the Eurobonds market. And the last time the government had tapped into the Eurobond market was in 2022, where it raised about $1.25 billion at a rate of 8.375% through a 7-year Eurobond. And now, one of the factors that the government would like to tap into the Eurobond market is for lower interest rates, because it's the dollar denominated, and at the same time to shore up the forex reserves But now the forex reserves is so many analysts have already seen it coming back up because Nigeria just recently got a $2.25 billion loan from the World Bank, as well as a $3.5 billion loan also from the Afrexim Bank, from the Afrexim Bank just recently, and it's a back-to-back. So now let's get more perspective on this, how this is shaping up, particularly when you look at the Naira. Let's bring in our fixed income and FX dealer, Mr. Bosun Obembe with Access Bank. Thank you for joining us, Mr. Bosun.
Thank you for having me. Good afternoon.
Okay, now, so this is, I would like to ask the question, is this timing, or when should we expect the Eurobond flotation by the government? Because this is already June, and June is almost on its way out. So when should investors expect this Eurobond market flotation?
I think the flotation should be expected this year, but the timing, probably, I think the proper timing should be towards the end of the year. Because if you, like you rightly mentioned, if you look at where the external reserve is currently above $33 billion, and if you look at it month on month, the growth has been over $600 million. And like you mentioned, we got a lot of inflows. The Afrexim 925 $5 million coming in. The World Bank 2.25 hasn't really reflected in the FX reserve. By the time that reflects in the reserve, you see it growing. And earlier in the month, we saw some offshore selling to the CBN, which has actually boosted the foreign exchange. So I think when you look at it, why do you want to borrow at this time? When we're going to borrow at double digit. Why not wait for when maybe the Fed will have cut rate? So at that time you can go to the market and able to borrow at a single digit. So I think the government will still go ahead with the Eurobond. However, I think this is not the proper timing given where the pricing is.
Okay, so now that's for the Eurobond. Now let's talk about both the Naira and the fixed income markets, which is just coming from that Salah break. How is the market performing against the dollar? And then also, how are investors, what is investor sentiment for the Treasury bills market as well as the bonds markets?
So for the fixed income market and the FX market, let me start with the FX. Over the weekend, the inflation figure came out where it went up slightly. So what we've seen CBN has done today is to float a normal auction. Ways in which CBN can tighten this to do a more auction or like CRR and other increasing the monetary policy rate. So what CBN has done today is to float a normal auction about 500 billion, given that the system liquidity was about 500 billion. So what CBN is going to do is to mop out this excess liquidity to be able to reduce the client's ability to actually buy or speculate in FX. So we've seen a lot of flows from investors willing to sell funds at 1470 to 1480. And on the fixed income side, it's been a quiet day, given the home auction that was announced today. Is currently going on, so and we expect the yield at the auction to reflect the little uptick we see in inflation rate. So the market is awaiting the result of the home auction, which will dictate the direction of the market. And next week, we have a bond auction. It ought to have happened this week, but due to the holiday, it was moved to next week. So investors are actually awaiting the increase in the inflation rate to reflect in both the bond auction that will happen next week. So it's been a quiet market.
A quiet market, but then we look out for how it ends Wednesday's trading session, particularly for the start of the week in trading. But thank you so much for your analysis on our show.
Thank you for having me.
Bosun Obembe, Equitel fixed income and FX dealer at Access Bank with the fixed income numbers. Now let's talk about the Middle East markets, where we see just the United Arab Emirates indexes in trading, and that's intraday trading session is a mixed color that you see there. For the Abu Dhabi, it's a green, and for the Dubai FM, it's red. So far, these are the only two markets. The other markets on the Middle Eastern side of trading are still in holiday mood. So far, the Saudi Stock Exchange is still from last week's close, which is on Thursday. So the market might still be on holiday, but so far, these are the two that were traded for the United Arab Emirates on the Middle Eastern markets that we track. And then also still talking about holiday, the US is also on holiday. This is Juneteenth, so that market is closed for today. But so far, let's see how that affected Asian markets. Asian markets indexes, they were mostly mixed at intraday. They ended Wednesday's trading session green. That's tracking the gains that we had on Wall Street, and particularly Hong Kong was the major leader there, 2.87% in the green, leading all the other Asian markets. For the Nikkei, is 0.23%, and this is coming after the export, the Japanese trade data for May, which showed that export beat expectation. It grew by 13.5% year on year, compared with a 13% increase expected by economists polled by Reuters, while the import growth was at 9.5%. Now, for the other sides of the market, we see Kospi, that's South Korea's Kospi, being in the green there. It was led by the tech giants like Samsung Electronics, LG, as well as SK Hynix, but that also reversed some of the gains that it had in the previous session. Now, for the Shanghai Stock Exchange, we see 0.4% decline at 3,000, almost dropping below the 3,000 points, while Australia's stock market was in the red, 0.11%. For China, the Securities Regulatory Commission said it would publish a new measure to deepen reforms of Shanghai's tech-heavy star market. So that is it all in a nutshell for the markets. Well, for the U.S. market, it's still closed, but the U.S. market will be open for tomorrow. So, Ini, that's it for all the markets at intraday and for the close of Wednesday's trading session.
Thank you so much, Aniti, for that.
Pleasure.
Let's go to Europe now, where the question being asked is Europe too politically unstable to attract foreign investment? A survey seems to be suggesting that. But since we're far away from that, let's have Cassandra tell us the details. Hi, Cassandra. Good afternoon. What are the details of this survey?
Well, thanks for having me, Inni. And ever since the 2024 EU election, business leaders and investors have seemed worried about Europe. Now that both France and the UK are headed into elections in the coming weeks and Germans go to the polls next year, those concerns are crystallizing even more. That's at least according to this survey from consulting firm EY. They say that political stability is one of the keys to reverse a decline in foreign investment. The survey of more than 500 executives found that political instability, including these upcoming elections, populism, and polarization, are the second biggest risks for them, as they see it anyway, trumped only by the number one concern, which is increased regulatory burdens. And there are numbers to show that these concerns are real. After the EU election results and the decision from French President Emmanuel Macron to call a shock snap election, there was a rally in the dollar connected to a sharp euro sell-off.
So apart from that, do we have other things contributing to this downward trend?
Well, there's been stagnant growth, big swings in energy costs, as well as this political uncertainty for a while. And the EY survey finds that this is damaging Europe, and particularly the European Union's competitiveness, especially when compared to the United States. The survey says that this is spelling diverging courses for the world's two biggest economic blocs. But even before the EU election, there was a decline in European foreign direct investment, which saw its first decline in 3 years, with the number of projects down 4% and jobs down 7% in 2023. And a recent look at German economic confidence showed that it improved only marginally in June. The ZEW Group's president said that, quote, sentiment and situation indicators are stagnating, and a finalization of Eurozone May figures finds that consumer prices are still a little higher than the ECB's 2% target. That's a lot of numbers, but one detail I found very interesting was that the biggest concern for this group of 500 business leaders was actually bureaucracy and increased regulatory burdens. The survey respondents point out that fostering a green transition and better connected infrastructure could actually reduce energy price volatility, which is a big concern for them.
I wonder if all of this is affecting investor sentiment.
Well, Europe's main stock markets lost ground in opening deals today, despite the good news of a further slowdown in UK inflation, which showed that country's inflation has, for the first time in 3 years, hit the Bank of England's 2% target. But the London FTSE 100 index lost 0.3% on the open. The Paris CAC 40 declined by 0.4%, and the Frankfurt DAX reversed 0.3%.
All right, Cassandra, thank you so much for that. Well, inflation numbers are coming out everywhere now. In South Africa, the headline consumer inflation came in at 5.2% year on year in May. That's the same level it was at April, this according to the Statistics Agency data. In month-on-month terms, inflation was at 0.2% in May compared to 0.3% a month before, according to Statistics South Africa. The South African Reserve Bank has kept its main interest rate at its highest level since 2009 for more than a year to try to steer inflation to 4.5%. That's the midpoint of its target band. The central bank says that at last month's monetary policy meeting that it remained concerned over elevated inflation expectations, estimating that inflation would only stabilize at 4.5% in the second quarter of 2025. We're still in South Africa, hours after the new president, or well, the continuation of the president, Cyril Ramaphosa, begins another term. Traders are giving him a vote of confidence. That's obvious in the numbers. The nation's currency rose the most in emerging markets on Wednesday, trading at a level stronger than 18 for a dollar for the very first time in more than 10 months. The equity benchmark, Anita did talk about that earlier in Johannesburg, it jumped to a record high. The 10-year sovereign bond yield extended its decline towards the lowest close in 14 months, and that's a turnaround for South Africa's market, which wobbled in the aftermath of general elections on May 29, when the ruling African its parliamentary majority by a greater degree than expected. But after the tense coalition talks, the government took shape proved to be investors' liking, who expect it to be market-friendly and implement reforms necessary to drive growth. Then we leave South Africa, we go to Kenya. Yes, the protest is still on in Kenya as the government has scrapped some proposed taxes in this year's controversial finance bill, including a 16% levy on bread. And that's after a public outcry. The announcement by the MPS came as police fired tear gas and used water cannon to try to disperse angry protesters in the capital, Nairobi. Dozens of people have been arrested. Lawyers earlier chanting crowds at the city's main police station to demand that detainees be freed. And since the coming to office in 2022 of President William Ruto, he has introduced several new and unpopular taxes with the aim of eliminating the country's national debt, which is about $80 billion. But critics of the latest proposal fear that they will stifle economic growth and lead to job losses. Some of the protesters marching through the capital have asked the president to resign, shouting, "Ruto must go, Ruto must go." Away from Kenya now, the World Food Programme, WFP, says that it will increase its food and nutrition assistance program in some countries in West and Central Africa this month, June. WFP, through the program, hopes to reach 7.3 million people between June and August, which is a lean season on the way at a time when hunger levels are high and food resources are low. The program will aid response plans of national governments in Nigeria, Burkina Faso, Cameroon, Central African Republic, Chad, Mali, Mauritania, and Niger. Malnutrition in West and Central Africa is reaching alarming levels, along a projection that 55 million people will face acute hunger during the lean season. In Egypt, the annual report of the Central Agency for Public Mobilization and Statistics, CAPMAS, on cotton for the 2022-2023 agricultural season shows that there's been an increase in Egypt's cotton exports by 36.5%. The report indicates that the total quantity exported amounted to 1.5 million metric quintals of cotton from the beginning of the season until the end, which is between September and August, compared to 1.1 million metric tons the previous season, that's September to August 2022. The report said that India imports Egyptian's cotton the most, with the quantity exported to it amounting to 715,000 metric quintals, representing 48.9% of the total quantity exported to the aforementioned period. The total consumer quantity of local cotton reached 54,300 metric tons or quintals from the beginning of the season until the end of 2023, and you can compare that to the previous season, which stood at 148,800. Now let's head to the crypto space and see what's going on there. I know US is part of that news that Ladi will be giving this afternoon, even though Bitcoin is in the red, still in the red.
Still in the red.
But we have more greens now.
Yeah, more greens. So it seems the altcoins are shining better at this point, even though they've been hammered, from
Ladi,
Bitcoin
something like this happened on Friday, where we saw Ethereum up and then Bitcoin down. I don't think Bitcoin has really recovered since then, but I wonder if it means attention is shifting.
Yeah, because now we see the US SEC saying that Ethereum is not really a security at this point. So I guess that's what's helping investors calm their nerves about Ethereum. And we're seeing buying interest there for Ethereum. So let's look at the top headlines in the market. Now we see the US Securities and Exchange Commission. They've concluded investigation into Ethereum 2.0, announcing that it will not pursue any enforcement actions. This decision marks an important victory for Ethereum and could serve as a critical reference point for the treatment of other digital assets in the market. Then we see retail investors are currently displaying caution toward the crypto market. This is different from the past cycles when we saw more involvement with investors that have lower income compared to institutional investors. So we're seeing retail pulling back at this point. So we're seeing maybe fear creeping in for retail investors, and they're getting that kind of risk-off sentiment at this time. Also, we see Base, the DEX user growth on Base is increasing and has beat the volume we saw on Binance Chain, at this time. So it's now trailing, Binance Chain is now trailing behind Base and Solana. Interestingly, meme coins appear to be the main driver for this user-based growth we see for Base decentralized exchange. All right, let's join us now to drill down on the US SEC backing down on investigating Ethereum. We have Rume Dominic, Deputy Managing Director, Aviation Industries, and he's also the founder of Vorum. Great to have you on the show.
Thank you very much for having me, Ladi.
Yeah, so I remember the US SEC held on to the notion that Ethereum was a security. They also mentioned a couple of other cryptocurrencies, tagged them as securities at this time. But do you think Ethereum is out of the woods at this point?
Well, Ethereum is a coin that has been resilient. Over the last 2 years, we've seen this particular Security Exchange Commission cracked down on it. And when it started with Ethereum 2.0, which was a new innovation on the current Ethereum infrastructure, it became something that the whole community had to rally behind. And the community has been able to do very well in terms of defending Ethereum and seeing that they get this particular one as a win.
All right, so what do you think happens next? Will this pave the way for the likes of XRP? Will they also be not tagged securities, going forward?
Well, XRP truly has been a resilient coin. Recently I was looking at the fact that XRP is poised to actually do so well in the market, and this is because of the user sentiment. And XRP has still been resilient because of the fact that they've won that particular case a few months back. So it gives the cryptocurrency industry a light in terms of the fact that we are not diving towards good regulatory policies that are to our favor, and all of the cryptocurrency will see a very good light because of these two cryptocurrencies that have led the way in terms of SEC win.
Right, and talking about these two cryptocurrencies getting the green light at this point, we know this market, they've been talking about alt season, when alt season, when are those altcoins going to rally? We've seen Bitcoin, move from as low as $17,000 all the way to over $70,000, but it seems the altcoins are not moving anywhere. Is this going to usher in alt season, this pause we're seeing from the Securities and Exchange Commission in the U.S.?
There's no doubt, truly, that we are in the phase 3 of the bull run. And truly, with this type of news, the fundamentals are set. And the technicals is also extremely bullish for us to get into that alt season.
All right, so what are you seeing going forward for this weekend? Do you see bullish sentiment continuing, or all this profit we're seeing might be taking back?
I see the bullish sentiment continuing very, very well. And just because of this particular news that has also come for Ethereum, making them being recorded in terms of winning that particular case, it is going to be a very good green candle we are going to have shortly.
All right, Remy Dominic, always great having your perspective. Deputy Managing Director, Aviation Industries. Thank you.
All right, I'm grateful.
All right, so Ini, there you have it. He's expecting green candles to continue, but I still see retail investors exercising caution with that data we saw earlier. So it's more like institutional investors at play right there in the market.
Yeah, and all season also.
All season, yeah. When is that ever going to happen? We'll see, definitely.
We'll see. Thank you, Laddie. Well, so that's it on the program. Thank you so much. Well, it's your first day at work, so I know you're so refreshed to get into the week, even though it's a shortened week. But we're here. We've been here, and we'll continue to be here. You can join us even before tomorrow by going to our YouTube channel. I'm sure a lot of information waiting for you from Business Morning to Business Incorporated. But you have a fresh episode of the program tomorrow. I'm Ini John McCoy. Enjoy the rest of your day.